Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Tuesday, October 29th, 2013. Well, a continuation of the trend to the upside today, and a candle that's made a higher high and a higher low. Previous day's trading we had a spinning top type candle that suggested some indecision in the market and suggested a possibility of a change of trend. We were looking for confirmation of that change and certainly haven't seen that today. We were looking for a lower high and a lower low. Today we've seen the buyers come back into the market very strongly and trading nowhere near yesterday's low, taking out the high of the previous day's trading fairly early. We've seen the market establish a very large white-bodied candle, a Maribozu, which is the strongest type of candle, opening down at the low and closing up basically at the high. So a day where the buyers have been in control for the entire trading day. Now this does cause some concern. Has the market done too much too soon now? We have been in a very strong first and second time frame uptrend for some time, and quite often when you have the extreme days such as this, we see the market want to relax a bit, and that is a real possibility. But really we can't take anything from the short-term dynamics with that regard. The buyers are very firmly in control, they're very strongly committed, and what we're going to look for now are signs of weakness of the buyers and the sellers starting to come into the market to potentially change the trend back to the downside. Now, in terms of the Fibonacci extension, we're examining the relationship of the first time frame uptrend to the previous time the market's trending up, and here we've seen the market trade in a bullish manner through the 23.6% level, and it does suggest that this market is destined for higher levels. The next level we should be looking at is the 38.2% at 1783, and if the market does trade up there, let's watch how the market reacts to that level. In terms of the Fibonacci retracement, and we're in an expansive mode of that, and we've closed just at or just beyond the 161.8% level. It does suggest that there is a possibility of the market trading higher, and our next target here is the 261.8% level at 1789. Now, in terms of Ichimoku, obviously a bullish market in all three time frames. We're trading above the cloud, so we have a bullish market in the long-term time frame, and we are trading a long way away from the cloud, so starting to become a little bit worried about this market. We are looking a little bit overextended with the distance that we're traveling away from the Ichimoku cloud, and we know that markets move from areas of disequilibrium back to equilibrium. So some sort of a congestion or some sort of a pullback wouldn't surprise. We're trading above the Kijun and the pink line, and that's pointing up quite sharply, reflecting solid upside momentum and an uptrend in the medium term time frame, and once again with that indicator trading a long way away, so looking a little overextended. The market is also trading above the Tenkan, the green line, so we're bullish in the short term time frame and a fair way away from that as well. We have been for some time, so looking a little overextended in the short-term time frame, and the indicator, the Tenkan, is pointing up very, very sharply, and that's reflecting solid upside momentum and suggesting once again that there is a possibility of a change of trend. The Chico span here is well above the corresponding price action, highlighting the strong momentum in this market and suggesting that confirming the trends in all three time frames. Now, if this market does come off, then we do have fairly strong support around the area that the Tenkan is trading at, and at the moment that's at 1742, and that would coincide with that minor swing low there, roughly around 1740, below their very solid support down at the window that was open. So not likely the market will reach that target soon, but if the market does come off, that support is an area where we should see strong buying come back in this area from about 17, roughly around this 1743 level down to around the bottom of the window, which is about 1733, and then even that swing high, the major high, the previous major high at 1729. So a very strong market in all three time frames and in terms of the short-term dynamics, but the extent that we're traveling now away from all of the Ichimoku indicators does raise some doubt about how much the buyers have left in them. They're due for a break. Some sort of congestion or a retracement wouldn't surprise, but we need confirmation of that, and what we're looking for is a weakness in the buyers in the next trading session or in a future trading session, or for the sellers to come back into the market.